Today we're going to talk about how to dominate Denver's real estate market. I've got a few tips. It's getting pre-approved, researching emerging markets, and hiring an experienced realtor. So those are the three things that we're going to talk about today. So pre-approvals. What do people need to know? You've been through that process before, right?
Yes, it was a lot.
It is a lot. Oh my gosh.
Your whole life.
I know, they're like, all you really have to do is fill out the application and upload your documents. I feel like I say this all the time, right? Fill out the application, upload your documents.
That is a lot of documents.
It is a lot of documents. And I swear, actually, I filled out the application not too long ago, and I was surprised how long even just the application took. Like, I think at least an hour.
I don't even know that I remember that part, to be honest.
Filling out the application. Well, and then you talk about the docs. Like, I know I'm pretty organized electronically, right? With all, like, I know where all my documents are, so I'm just like bang, 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 upload here. But for somebody who maybe is still keeping paper copies or maybe doesn't keep any copies, like, it can be
Digital is definitely the way to go, though. Like, yeah. Well, I remember too when it was just like, because of the process and going through the timeline of everything, it was like, then having to renew everything was I think the most like exhausting thing for me. What you're dealing with working and then like having to stop and then like the next paycheck's here, so now we gotta like update everything else to the next bank statement or whatever. Like, obviously that's depending on days on market kind of situation.
But yeah, you're talking about from the time that you think about buying and you fill out the application, upload the documents, figure out, what your payment's going to look like, what purchase price you're approved for, then to the point of shopping and going under contract, and then under contract to close. Like, you may be sending in documents, every couple weeks.
Yes.
Like, it's just, yeah. And some people who are really private about their finances, it's tough for them because they're like, we need your social security number. We're going to pull your credit score. Give us all your bank statements, give us all your assets, retirement accounts. Like, they dig deep, right? They dig deep and they need a full picture of your finances, right?
I actually like had forgot about certain accounts or whatever. Like, just like, oh, I do have this other stuff I guess I need to send in also. Whoops. So yeah, it kind of helped me keep track of that though a little bit more.
Yeah, so you're saying that the process of getting pre-approved has helped you become a more organized person?
I guess in one way.
This is fantastic. Welcome to the digital age, Tabitha.
I know, right?
Yeah.
Yay, adulting.
Well, and we don't even go shopping, really. Like, you can look at stuff in the MLS on the search that I set up for you, or you can look at Zillow or whatever. But we're for sure not setting showings and going shopping without having that pre-approval. Like, there's just no point in my mind.
Yeah, I was going to say there's no point to it. So if you can't get it.
Yeah.
And the way this market is, you gotta
get out there. Although it has slowed down quite a bit from how it used to be. But when you bought, because you bought during the COVID years.
The end of it though, right when everything was going up.
Yeah. So, okay, so the pre-approval, we need to get back on track here. When the lender is doing a pre-approval for you, they're looking at a few different things. They're looking at your credit score, which is usually a FICO credit score. And we need a whole nother episode on the credit score scam in America. But
okay.
If you're keeping track of your credit score, like on Credit Karma, that can be a good estimate of where it is. But you have to know that, like, you can't just give your lender a number that you've seen somewhere. The lender has to use the number that they pull, right? Because they're pulling their FICO score.
Right. It's a specific formula that's used for mortgages, right?
Yeah.
So.
Yep. So they look at your FICO score, and if you're applying with more than one person, they will use the middle score that is lowest. So they take
that.
Yeah, so they take both people's middle scores, and then whoever's is lowest, that's the one that you're being approved off of. That's the one that's determining your interest rate, right? Because the higher your score is, the lower your interest rate can be.
Right.
And there's some breaks in there, right? Like I think the absolute lowest credit score that you can buy a house is like 580. And then I know that there are breaks at like 650, 680, 700, 720. And at the highest it goes is like 800 or 850. I don't remember which, but yeah, like if you're over 700 or over 720, like you're getting the best interest rates. But if you're under that, you can still get a house. You might just be paying a little bit more in interest. So they look up your credit score. They get your credit report, which shows them all of your debts, right? So this is like, how much balance are you carrying on your credit cards? What's your auto loan? Do you have a mortgage? All that stuff, right? And then they look at your income that they've verified with your pay stubs or W-2s or tax returns or whatever.
Right.
And they go, okay, you make this much and you have this much in debt every month. So this is your debt to income ratio. And then they have to be able to add in your monthly mortgage payment onto the debt you already have, and you have to stay below a certain ratio, right? And it depends on the loan programs. Like there's so many different loan programs and rules and guidelines.
Right.
Yeah. So like as an example, being under 45% of a debt to income ratio. So if your income is 100, then your existing debt and your new mortgage payment can't be more than 45% of your income. So
what's the best way to keep that like as your goal? Do you have any,
like, to keep your debt to income ratio down?
Yeah.
Well, I think keeping your debt low, is part of that. And, when we deep dive into credit scores, one of the things that we learn from Alyssa is that we want to keep our credit card balances somewhere between 10 and 30% of their available credit. So so just to try to use round numbers, like if my credit limit on one of my credit cards is 10,000 and I want to keep my balance 10 to 30%, that would be 1,000 to 3,000. Yeah. So I really don't want the debt on that credit card to be more than 3,000 at any time.
Right.
And you want to be using it, right?
Balance.
Putting stuff on and paying it off. Putting stuff on and paying it off. That's what they want to see. They don't necessarily see, this is interesting, they don't necessarily want to see credit card balances sitting down at zero where you're like, I don't have any debt, my balance is at zero, and it's been at zero for months. Like, you would think that that's really great.
They'll just close your account if you don't use it.
Yeah, they'll either,
and that's a whole hit on
that's
your
a
credit.
ding. So yeah, that's another ding to your credit.
Yeah, a whole
It's a
episode,
game.
a whole episode.
Yeah, so we should keep moving. So the pre-approval, so that's what they're looking at. You are filling out an application with all your financial and personal stuff. Mm-hmm. You're uploading all your documents, including everything, right? Tax returns, W-2s, paycheck stubs, bank statements, any retirement accounts, that kind of thing. And then they are looking at your credit score and debt on your credit report to use all of their little loan programs and guidelines and formulas and figure out how much you can afford,
Right.
And interestingly, if it turns out that you don't want to spend as much as they're telling you can afford, that's perfectly fine. Like,
you don't have to hit that mark. It's like the speed limit. You're supposed to really go below it, right?
Yeah.
It's not over it.
Exactly. You get it. You get it.
I try, a little bit.
you know, that's not always the case. You know, sometimes we can't get approved for as much as we'd like, but but a lot of times, you know, people can get approved for more than what they're comfortable spending on a monthly payment. So we've talked a lot about the pre-approval process and what that looks like, but we haven't really talked about one of the ways that we use that pre-approval, and that is that we don't go shopping until we have the pre-approval. So now we're shopping, we're going to showings, we're looking at houses, we're trying to find the one that's going to be the one, right?
Right.
And when we go to make offers, we're not only putting together the contract that is your offer to the seller to buy the home, but when we submit that offer to the seller and the listing agent, we're submitting it with the pre-approval letter, right? So like this almost, I mean, this is a norm in our market to do it this way, but it's also kind of the start of negotiations in some ways, like putting your best foot forward from the start. Like, here's our offer, please take it. And by the way, someone's ready to give me the money. I'm all ready to buy your house, you know?
Yeah.
Yeah, you just can't really put in an offer that is not accompanied by a lender letter.
Does that, I mean, unless it's a cash offer, does that ever go through?
Even if it's a cash offer, we need proof of funds.
Okay.
Did I say proof of friends?
Fun.
If you're paying cash and you don't need a mortgage for a property, then instead of the lender letter, you are submitting proof of funds.
Okay.
Which is essentially an account statement from somewhere that's all redacted, like they were in the CIA. But it's somewhere on it, it shows a number that's a balance. Yeah, it shows it has like their name and a balance.
I
like
even thought about it that way.
Yeah, you've never thought about
redacted though. Yeah, because I just have $300,000 laying around. Someday, putting it out there. Manifesting this.
All right. Well, we're talking about tips to dominate Denver's real estate market. We covered pre-approval pretty well. I think we'll cover the next one, emerging markets and neighborhoods. Let's talk about that in our next video. We'll see you there. Yeah. If you like this content, follow the channel and don't forget to like and subscribe.